All right, what's going on, guys? We're going to call this December update. I think we're skipping November, but that's okay. It has been a bit of a slog here over the past month or so. I just want to start off by taking us kind of where we've been and kind of where we're going. So I don't plan on making any trades or anything right now. So this was October 11. As you see, we sold out of our FAZ at roughly $11.16. It then went up to about $12 before it came back down. We purchased FAS the same day at $60.50. The price actually went down to somewhere around I think $53 or something like that. We got in at 56, and I did a video around this time where I explained that the next stop is roughly 50, and so we haven't gotten there yet, so I haven't done anything. Currently the price is at $62.84. okay, that's the current price. I want to go back to these dates, though. It's very important. This was October 23rd, 2018, and I just want to show you a quick chart of what has transpired since then. So so this was roughly the 23rd of, there we go, 23rd of October was right here, and you see we took another dip. Now, I don't talk a lot about patterns in these videos, but I want to talk a little bit about chart patterns here. And what you're looking at right here is what's called a double bottom. All right. Anytime you see a double bottom, that is a sure indicator that the stock is about to take off to the upside. And what this really means is that what's happening is we have a lot of selling. People realize, oh my goodness, this thing is going down too far. The price is too cheap. And so what's happening is you have what's called a dead cat bounce. All right, a dead cat bounce is basically people buying the stock simply because they think the stock has gone down too far, not necessarily because they think it's a good purchase, just because they're like, listen, it's going down way too far, so let's buy a little bit here. And that's why we have this bounce. Okay, this happens over and over again over the last, I would say roughly 50 years at least, if not longer, in the market, these dead cat bounces. All right, and then what typically happens with a dead cat bounce is people realize the dead cat bounce, right? They understand that it has only gone up temporarily, if not artificially, right? And so there comes another bit of selling. Okay, this may be short selling a lot of times. It may just be people selling the position, right? So remember, they bought here, right? And because they bought it, the price jumped up. Okay, once it jumped up, they then sold their positions, and we get right back down to our bottom here. Okay. And like I said, it's called a double bottom, all right, and so that's a sure sign that the price is about to take off. There's also double tops, in which the opposite is true, okay. So anyway, so this is October 26th, and then what we have here, let me scroll up a little bit, is we have a we have a high of $65.43. All right. Now, I will tell you, psychologically, when the price got to $65, I'm saying to myself, well, the price just came back down from 70, right? Surely it's not going to stop at 65. Now, my profit at this time was about $1,200 to $1,400, I believe it was. Very tempting to take profits, right? But I didn't. I was patient. I was poised. And the reason why I didn't take profits is because, let's go over and take a look at our indicator here. Right. Our RSI calculator at this time, when the price was $65, was hovering right about there, 57. Okay. Now, as I've stated before, once the RSI is above 80, that is a definite sell, no questions asked, right? Now, that doesn't mean that that would always be a sell signal, but that is the rule. Okay, so as a rule, looking at that, I knew I wasn't going to sell. All right, last time we sold FAS was July 10. And let's take a look at our dates here. We don't even have this one on the thing, so we have to go out a little bit further. So let's go 6 months. Let's look down here. All right, here we go. So roughly what, July 10, right here. All right, so this is when we last sold. Can I go up? It's not going to give me a date. The date is here, so let's do this. Alright, now let's look. Okay, so July 10, and we had an RSI at the time of 55. Well, at the time it wasn't 55. It's 55 now because, you know, we're looking back, right? At the time it was actually above 80. But historically, though, like I said, looking at July 11th, this RSI was at 53. All right, and as you can see, what happened there, because again we're looking back, right? July 11 is about there, and this thing took off, up, stayed elevated for quite some time, which culminated in a high somewhere around here, which that puts us at 66. Okay, so what we're doing is we're looking back, okay, based on this number here, right? 65, that is our historical high. Okay, and like I said, at 65 we were right at, I can't see it now, I swear, zooming in just really screws up stuff. But anyway, it was less than 50. It was less than 60 for sure that day. So held on, didn't sell. We came back down. I was very tempted to buy more, but like I said before, I didn't want to touch this thing until it got down to 50. Now, it's important to note here that when it did come down, it never got as low as its lows. And so what this means is, in the industry, this is higher lows. Okay, and when you have a higher low, right, so these are lows, right? This is low as the stock got, right? And this is low as the stock got, you know, within this time frame, and the lowest it got was higher than the previous lows. Means that, you know, this thing still has some room to move. And so as you see, it has now come back to roughly 62, 63. My game plan is to hold this thing until we get an RSI of at least 60, 65, 80 being the absolute sell point. All right. Once we touch 65, okay, that will be another level that I'll have to look at, and I'll probably come back on and do a video about it. But that is our next level to look at. May go a little bit higher. Okay, now let's talk fundamentals a little bit here. All right, fundamentally, what's going on? Well, we got Christmas coming up, Black Friday. Amazon did really well. We don't know about the other stores quite yet. Personally, I did not hear a lot about Black Friday. A lot of that is because I'm just not in that realm of things, right? But I think that says something, right? Even someone that's not really involved in Christmas and Black Friday and stuff like that, not hearing about it means that maybe it wasn't as big as it has been in the past. Another thing that's going on is retailers, Walmart, Target, Kroger's, Albertsons, all those guys, they have been reporting lower numbers over the past 4 months. And so we don't know yet what's going on. There is a little bit of inflation, but as a consumer myself, I haven't noticed it a whole lot. So I don't think that is the issue. The employment rate is still way down. Pretty much everyone is working. You know, like I said, I'm in the world. I haven't seen it. I am in Texas, so that's kind of an isolated thing because our unemployment is always pretty low. But as as far as I know, as far as what I've read and what I've seen in the numbers, the economy is doing decent, and so we expect the banks and the financial stocks to keep moving. The Fed is looking to raise the interest rate again in December, and so that bodes well for the finance guys and the bank guys, because they're able to make more money, right, when the interest rate goes higher. Now, the other thing is always going to be an argument whether or not they should raise the interest rate based on what has been happening in the market thus far. The last video I think I did, we looked at the S&P 500, and we were looking at the different levels, and I have been keeping up with it on a daily basis, and I'm happy to announce that I was completely correct. That roughly 2700, 2640 was the exact number, that it wouldn't break past that, and it hasn't. The market has stayed above that number, which means that we're going to go a little bit higher. Once we fall below 2640, significantly below 2640, then we may be in a little bit of a trouble and looking at possible recession type stuff. Otherwise, I see nothing but blue skies ahead of us. So again, we have Christmas coming up. We have the Fed raising the rates. The China trade thing has been a real issue for the market lately. That plays into inflation as well, because a lot of things that we buy are from China, and if there's tariffs on those things, then that makes things here in the United States more expensive for people. So that is also inflation. If a trade deal gets done with China, then we're probably going to see the market take off like a rocket. I keep hope alive. I think it will get done. Doesn't mean it will be done, but I think it will be done. And that's really about it. There's nothing else going on right now other than that. So we got Christmas, we got the interest rate hike, and then we have the China thing. The market can't take it, right? Because when interest rates go higher, that means that companies have to make more money to make past that rate, right? The risk-free rate of return. And the question is whether or not those companies can. I want to take a quick look at the opposite, FAZ, just really quickly here, because as FAS goes, so does FAZ, right? All right, so we sold FAZ October 11. So let's go to October 11, and you see this huge green. I mean, there's a lot of buying there, right? That's the day that we sold it, and yeah, right here. And unfortunately, we can't see any numbers because of the zoom. There we go. All right, so we sold at 11:45, and like I said before, once we sold, this thing took off again up to about 12 something. It's come down. It came down as low as 10, which is the exact same time that FAS went up to about 65, right? I'll tell you that historically 10 to 11 has been where I like to trade this thing. I like to buy at 10 and sell at 11 is what I've been doing. But like I said, based on the technicals, right, based on the RSI, which is about 40, yeah, 38 roughly, it's just not low enough for me to buy. So again, I just was patient, poised, cool. We're almost back to that. We're at 44 right now, which is still way above our 20, right? So we want to see this thing come down further before we decide to buy more. Right now, we're looking at a possible double bottom. If we don't see this thing move lower tomorrow, it may go up again, which means the market is going to come down, because remember, this thing goes up whenever the market is down. So if we don't see this thing come down Monday, then that means that we're going to possibly look at the market coming further down. Also too, we want to see it get below this $10, right? Again, once it gets to $10, FAS will probably get to about 65, and I'll start looking at possibly doing some trades then. But for right now, we're just kind of hanging out and see what happens. So just to reiterate, right now we are in FAS, and don't plan on buying more until this thing gets to $50, and we'll look at possibly selling at 65 if not higher.